chairperson. Yes. I was SRC chairman, 1920 I came.
Yes, yes, at that time. Yes, sir.
Yeah, Prasanna Garu was also there.
Yes, sir.
Yes, sir.
So, that is a national conference, I think. 2-day state level conference.
2-day state level conference.
Correct.
AP state level conference.
Yeah, right. Yeah.
Right. It's 6 p.m., sir. Shall we start with your permission? And
yeah, sure. I'm ready. Please. I will just, sir, 1 minute. I'll just try to share the screen. I tried once. Is it visible?
Yes, yes, it is visible, sir.
Okay, sir. Right.
Right. Friends, good evening, all of you. You are welcome to this seminar, virtual seminar on Company Audit 2021-22 and standards on auditing. Our speaker of the day, CA Jaman George, who was the former chairman of SIRC. He's a very nice person and a nice gentleman. And friends, before the Jaman sir commences his presentation, let me play the motto song. Give me a second.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 पुरुषो निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता
Now I request the chairperson to give her opening remarks.
Today's resource person, CA Jaman K. George, former SIRC chairman and colleagues at managing committee, past chairman of Vijayawada branch, and other fellow members, very good evening to one and all. It's my great pleasure to welcome you all for the VCM on the topic Company Audit 21-22 and Standards on Auditing. As you all know, Auditing and Assurance Standard Board under the Council of ICAI have formulated auditing standards. Compliance of these standards are mandatory under the directions issued by the Council of ICAI and as per Section 143(9) of Companies Act. It helps to carry out independent audit by the auditor. And more particularly, while carrying company audit, it provides credibility to set of financial statements and gives the shareholders confidence that accounts are true and fair. Our today's resource person, Jaman K. George, is a lively and high energetic individual. Despite his personal emergencies, it is really admirable that he agreed to participate in the session. Thank you so much, sir. And it demonstrates your commitment and dedication to the profession and interest in sharing the knowledge to the members. And also it demonstrates your affection to our branch. Thank you so much. And finally, hope everyone is busy in tax audits. Despite the mental strain as the due date is approaching, I kindly ask everyone to take care of your health as it is more vital than everything else. Thank you, Anila.
Thank you, madam, for those words. Friends, let me say a few words about our speaker, CA Jaman K. George. He was qualified in the year 1992 and he has done his articleship at Chennai. He has 28 years of diversified practice experience and he was the founder and chief executive partner of Messrs. JVR and Associates. It is an 8-partner firm with offices at Kochi and Trivandrum and an associate office at Dubai. He specializes in corporate advisory services and management consultancy. He has done more than 800 presentations across India and West Asia. He is also a regular paper presenter or speaker at ICAI, CPE programs on accounting standards, corporate audits, standards on auditing, Ind AS, among other topics. He is serving ICA as a peer reviewer trainer, and he contributed articles in ICA newsletters. He has served as a member AASB during 2005-6. He is faculty for auditing at ICA Ernakulam for the last 18 years. Visiting faculty at many B schools and management institutions, he lectures at ICA Delhi. He has conducted training programs for Income Tax Department and Ministry of Corporate Affairs. Has done training program on IGAAPs and IFRS for many renowned corporates, including BPCL. Among the social activities which he carries out, he is an honorary treasurer to Kerala Management Association. He is on the advisory board of St. Teresa's College, Ernakulam. He was the past president, Rotary Club of Cochin Central and member of PHF Society. Was honorary treasurer of Regional Sports Center, Kochi. Friends, with these few words, I hand over to today's speaker, CA Jaman George. Sir, it's over to you, sir.
Thank you very much. Good evening to all of you. Very dynamic chairperson of Vijayawada branch, Madam Gedam Sridhar Srini, Vice Chairman Narendra Babu sir, and Ravi Kishore sir is a strong presence. I remember our meeting here in Cochin, and ever since then, keeps a very warm relationship. And thank you for the very pleasant introduction you made. I've completed 30 years now. You said 28 years. 30 years in practice. I qualified in 92. I've always been in practice. So I'm happy that you made me 2 years younger in front of so many members who are online with us. Illustrious past chairman of Vijayawada branch. I know Vijayawada branch is a great center of learning and excellence, not only for members, the large number of students you have there. And institute, the branch there is very active and has been bagging awards every year, almost every year in the category. I have come there once physically. It would be my pleasure to come there again. Other managing committee members of the branch, 56 of the members who are logged in with us on this Zoom platform, others who are on YouTube. Once again, warm good evening to all of you. I'm extremely delighted to be with you online though on this Friday evening in this tax audit season, when to be part of this empowerment program on company audit with specific reference to standards and auditing. It was about a week back, Madam called up and asked whether I can do a program on standards and auditing. I said, just standards and auditing is not a very selling topic. Because in smaller towns like Cochin and Vijayawada is not a small town. Andhra is one of the most happening states today. And you get the ease of doing business, you get the first rank. You have, the first rank, and you have a administration, good administration, public administration, and branch. The state is really on top of the scale in many of the parameters. But then people generally tend to think that standards and auditing is for metros like Mumbai, Chennai, or maybe Hyderabad sitting there. But then it's not the case. As Madam rightly said, they are mandatory standards pronounced by the institute, and also mandatory under the Companies Act under section 143(9). In her introductory remarks, that was quite relevant. Thank you, ma'am, for setting the tone, because that's a word of caution that it's not only a dictum by the institute, but also under the Companies Act under 143 subsection 9. As the presentation unfolds, we will know the importance of standards and auditing. And the introduction, Kishore sir mentioned about me being a part of the Auditing and Assurance Standards Board, the policy-making arm of our institute. That was 17 years, long years back, when Manoharan sir was vice president, became vice president. He co-opted me onto the AASB, and I've seen, and I could contribute also a little bit to the policy-making process of the institute. But membership at large, even today, even after standards and auditing becoming mandatory under the Companies Act, the level of compliance is very poor, unfortunately. And this is a new enlightenment or realization of the council, the last central council, as well as a council which has just taken charge 1 year back, not even 1 year. So this has become a mandatory topic for branches. We call them program organizing units. The branches in the peer review terminology, in the CPE terminology, they are called program organizing units. Therefore, the council in its collective wisdom instructed all the branches to have mandatory programs on standards and auditing to improve the awareness, one, and with that, the application also of the various standards which we are mandatorily required to comply with. So this is a backdrop in which we are discussing today. And Company Audit 21-22. Company Audit 21-22 is very challenging as compared to the previous years, because we are having, this is a year of changes, complete year of changes because of two major changes. One is that there is a complete new revised amended Schedule 3 on preparation of financial statements, companies' balance sheets. The second one is a CARO 2020. CARO 2020 is a completely new version. 7 new clauses have been added as compared to 2016 CARO. We'll touch upon all that, but today the thrust and focus as required by the Central Council is mostly on standards and auditing. But time permits, we have about 2 hours at our disposal, started on time. And therefore, if time and mood permits, we will surely have a run through of Schedule 3 changes as well as CARO 2020. With these words of introduction, thanking the organizers, the chairperson, particularly Madam Sridhar Shareen, for inviting me to this program online. I would like to share my screen and take you through the short presentation. Is the screen visible?
Yes, sir.
Yeah.
Fine.
So this is what a very, very challenging year 21-22, and compliance with standards and auditing were quite mandatory. We'll take the next few minutes to have the understanding clear and move on to the specifics of standards and auditing. Now, talking about a company audit, let us look at what are the key aspects which are there in the company audit sphere. There are 3 things which are very, very important. One is that the Companies Act 2013, though it is 9 years old, it is still evolving. You know that the term of the Company Law Committee has been extended, and our past president, G. Ramaswamy sir, is continuing in the Company Law Committee. His term has also been extended. So the focus being ease of doing business, and reducing cost of compliance. The burden of compliance, rather, not only the cost, the processes involved, the time involved, the penalties. So the burden of compliance also has to be brought down, because today India is on the world stage, and most of you would have heard recently Jeff Bezos, the CEO of Amazon, made a mention that this century is going to be the Indian century, and the most collaborative business relationships would happen between India and the US. And also in the recent Davos summit, there was a discussion, a term which was evolved as ABC. Because of China being too aggressive, there is a thinking that the ABC stands for anything but China, So many of the global industries, businesses, not only tech companies, even manufacturing companies, Make in India kind of initiatives are attracting them to India. Therefore, we have to make the Companies Act as friendly as possible. It cannot be a draconian piece of enactment. Therefore, we have to be clear on the understanding. So therefore, the statutory framework of the Companies Act 2013 is very clear, and Chapter 10 deals with audit and auditors. And we have audit and auditors rules which came out in 2014. We have sections under this chapter which we'll run through. 10 sections in this chapter. Professional pronouncements, which are very important. Accounting standards are made mandatory under Section 133 of the Companies Act 2013, and standards and auditing under 143(9) of the Companies Act 2013. Both these standards are mandatory. AIS has limited applicability for small companies, but standards and auditing, they are applicable for all companies, irrespective of their size. And at this point of time, since we are doing tax audits, and tax audit returns have to be filed by the month end, and there is the ministry is now moved to extend the timelines. We should be doing that very carefully. And standards and auditing will apply wherever there is an opinion expressed by the auditor. I repeat, if an opinion is expressed on the financial statements by the auditor, standards and auditing will apply. So non-corporate tax audit cases where we issue the 3 CB report, standards on auditing have equal applicability, not only in company audit. We are discussing company audit and essays, but at the same time, knowing the large number of tax audits which we have to do, and we are doing, and peer review subjects the tax audit papers also to examination, one should be very clear and aware that essays have equal applicability in essay, standards on auditing have equal applicability in tax audits also, in 3CB cases, non-corporate tax audits. Because in 3CA, we are referring to the statutory audit report. Corporate tax audits, we are referring to the corporate audit, statutory audit report, either done by us or some other firm. There is no expression of opinion. True and fair doesn't come there, but in 3CB, true and fair appears very, very clearly at the end of the report. We are saying that the accompanying financial statements give a true and fair view of the position through the balance sheet and the operating results, the performance through the P&L account. This is how we are. And therefore, lastly, the third key aspect or key feature of company audit is the specific reporting requirements. We have CARO 2020, which I mentioned earlier. In fact, I had mailed across editable Excel format of Schedule 3 to all the members in the southern region. The reason being, because we did some homework in our office, me and my audit manager, a partner in charge, and some of the senior students, and we developed this format. And of course, issued a CARO, prepared a CARO report also. So in editable Word format, the CARO report and the Schedule 3 was mailed across to the members across South India. If you have not received it, I will be only happy to share that. You can shoot a mail. I'll share my mail ID, and then so that we don't have to reinvent the wheel. Some of you would have completed some company audits, but then if requires a relook, essentially that has to be done. So specific reporting requirements is CARO, then IFC, internal controls over financial reporting. In some companies, we'll see to whom it's not applicable. Say, small companies, for example, small companies as defined in section 285, it's not applicable. Then we have the whole government of reporting requirements under 143 E, F, G, etc. We will see towards the end of this presentation. So these are key aspects. Before going into the specifics of standards and auditing, the audit process has a bearing, or the other way around, essays should be aligned. Essays are aligned with the audit processes. So let's have a look at what is the audit process, which are a period of time. We have probably, some of them we have, before that, I have the screenshot of, screenshot of chapter 10. Now, any reference to the Companies Act 2013 today should not be with reference to any book, because as I told you, it is still very dynamic, it is evolving, it's not a settled piece of legislation. Therefore, go on to the MCA website, mca.gov.in, and log in. You on the left-hand side on the top, you will see the Companies Act 2013, the ebook. So when you click on chapter 10, this is how the screen would look like. It has got all these sections 139 to 148. This understanding is very important. Whoever is seriously doing company audits, when I say seriously doing company audits, it's very important, or rather I would say it's very risky to be passively doing company audits and corporate law consultancy. This awareness has to be clear. If you have a team in your office, most of us have today, the team should be empowered, and every member who has at least one company audit, I would strongly suggest that these sections be read threadbare and understood and applied. 139, appointment of auditors. 140, removal, resignation of auditor and giving of special notice. 141, eligibility, qualifications, disqualifications of auditors. 142, remuneration of auditors. 140 is a very, very important section. Most important section in this chapter, if you ask me. What is the caption? Powers and duties of auditors and auditing standards. That is where 143 subsection 9 comes in, as chairperson mentioned. Auditor not to render certain services. 144 is also a very important section which the member should take note of. If you are the statutory auditor of a company, you cannot render multidisciplinary services. The whole list of services are given in section 144, and also some of them in the rules. Like, for example, internal audit, accounting services, the working capital, project report preparation, etc., etc. And so therefore, multidisciplinary services, there is a restriction, 144. So that is there. 145, signing the report, AGM. 147 is penal provisions 148 is the cost audit of certain companies. So this is very important. And the preceding chapter, this is chapter 10. The preceding chapter is also equally important from a preparer's point of view. If you are a corporate accountant, chartered accountant, CA working in a company, sitting at this side of the table, we as auditors come from that side of the table. And chapter 9 is also equally important. Accounts of companies. 128 deals with books of account. 129 deals with financial statements. So it is through section 129 that we travel to schedule 3. We do not go to any section directly through to any schedule directly. It is through a section that we travel. Section 129 in brief says that the balance sheet of companies, a balance sheet, the financial statements, the balance sheet P&L of companies should be in the format given in schedule 3. And schedule 3 has today 3 divisions. Division 1, accounting standards companies or non-Ind AS companies, NON, non-Ind AS companies, Ind AS companies, NBFCs. 3 divisions are there. So the formats are very clear, and relatively, if compared to earlier schedule 6, it's a rigid format. The expression or in a format as near thereto has been done away with in the new regime of the Companies Act 2013. Therefore, the format is fairly rigid. You can have some small additions, but no deletions. That's what I would infer it as. So this is the backdrop of the company audit in year 21-22 especially. This awareness should be very, very clear. With that, we'll just quickly look at the audit processes, about some of the processes which we have not been doing of late. Because what happens is, today, client data is flying around. The moment you say that the audit, or you call the client or the client approaches you, which rarely happens, you make a list of audit clients and you send a letter or call them or send an email or a WhatsApp. They would say that, sir, I will send the tally data or it could be QuickBooks. I will share the data with your team or with you, or I'll send it to your office mail ID. And then it is shared with the students. There's a huge challenge of data integrity, data security, confidentiality. But today we tell the students, the team, that it should not be shared. We take them, make an oath of confidentiality, etc. That's different. Now, coming back to that, so we prepare financial statements for the clients. Strictly speaking, that is prohibited. But vast majority of our clients, in my experience, including some of the listed companies, they're not able to internally prepare the balance sheet and P&L. Am I right? I hope all of you would agree. In between, if you have doubts, we can have, you can use the chat box, or if the administrator or if your chat, if you can unmute yourself and shoot a question, that's also fine in between. Anyway, we are going to have a Q&A session at the end. But in the meanwhile, some questions, doubts in the chat are also welcome. So we prepare the financial statements for the client and tend to think that audit is all about preparation of financial statements. Our new generation students have also caught up that spirit, which is very unfortunate. Of course, we help them, but audit considerations are completely different. The end product of an audit is an opinion on those financial statements. This may sound theoretical, but this is the fact. This should be the focus. Because today, tomorrow, if there is a disciplinary issue, the fact that you prepared financial statements should not be mentioned at all. You have the client to prepare financial. You are just the auditor. And the very impersonal question which the DC or tomorrow if NAFRA is very active in the listed space now. So if NAFRA spread its wings and started flexing its muscles to non-audit, non-listed space also, then many of us would be coming under the lens. We are already under the lens. Therefore, the question is, have you done the audit properly? Very simple question. There have been allegations about negligence, audit failure, which has resulted in the bank loan getting bad, or some of the creditors getting cheated, investors getting cheated, etc. Have you done the audit properly? And the answer, if to be yes, if I've done the audit properly, there should be total compliance with standards and auditing. That is the importance of standards and auditing, which has to be understood in the right spirit of things, not only understood, applied at the workplace, in every audit, at every level. That has to be done. So opening balance checking, a very important exercise. It looks like next 2 slides may look like an auditing class, but many of the places where I've interacted with the members, in the presentation, physical meetings, we have face-to-face interaction. And they said that, these are things which are not very seriously looked at. Internal control evaluation, they are called compliance procedures, and communicating with those charged with governance is a very, very important thing which audit has to do. In fact, SA 315 asks us to understand the entity properly, its environment, based on which the audit risk has to be evaluated. Audit risk is, in brief, nothing but the risk of expressing an inappropriate opinion. When things are not true and fair, the auditor ends up saying that, yes, it is true and fair. So that is something which is to be kept in mind. Vouching, verification of source documents. Today, in many places, the hard copies are not available. Online verifications are possible, supporting documents. The idea is to say that the proper transactions, duly classified, relevant transactions, only has been captured into the accounting system. That's the way we look at vouching. Ledger analysis, individual ledger accounts. This year, I have one of my partners relocated to setting up a branch, and I started getting involving in audits. And some of the companies, with the student by my side, we would do a run through the ledger. And for an experienced chartered account, I think it will take only 1 to 1.5 hours to have a critical analysis of the individual major ledger accounts, not the small accounts. At least I have a ledger with transactions. I think that we should do. That's very important. These are all necessitated by standards in auditing. It is not Jomon's version of the story. These are all audit basics which we learned, which we applied, but over a period of time, maybe because of the advent of technology, maybe because we are taking audits a little lightly, maybe there is an extra focus on preparation of financial statements than the audit considerations. Many of these aspects have taken a backseat, or we put it on the back burner. This cannot happen. Let us restart all this. Verification of assets, inventories, verification of documents of title. If there is a landed property, land in the ledger account, the auditor should insist on seeing the original of the title. The story goes, verification of assets as well as liabilities, loan confirmations, all those things, documents of title. In the case of large debtors, particularly when the movements are not very smooth, the idea of getting balance confirmations, year-end confirmations are all very, very important. We should do that. Moving on, analytical procedures, yes, ratio analysis, trend analysis, all that's very, very important. Intra-firm comparison. This year with the previous 1, 2, 3 years. Intra-firm comparison with other similar industries or similar entities in the same industry. Therefore, that's very important that we do analytical procedures. And those who are familiar with the revised Schedule 3, in the notes on accounts, we have to give about 11 different financial ratios, including debt service coverage ratio, ROA ratio, and so on, as part of the presentation of financial statements. So with all that, you can check, and if there are major variances, the auditor should look into and see whether these variances are justifiable, or if there are adverse trends, should be inquired into, and doubts, if any, should be dispelled. Comparing financial statements with books of accounts. Finally, in the audit file, we talk about soft copy. Today, many of the documentation, audit documentations happen online. So when you call a student or an audit manager for audit finalization, you ask for some of the notes. For example, ledger analysis notes. The student says that, sir, that's in the client folder. That's in the client folder. I put in an Excel sheet. It's called LSA, Ledger Scrutiny Analysis, or LA notes, LA queries or LA notes. So that can happen. But I think, in all fairness, I don't think there is anything which prevents us from asking for a final signed trial balance. How much we talk about technology, I must sound old-fashioned, but this is something that's very important. A detailed trial balance with opening balance, transactions, and closing balance, signed by the finance manager level, including the groupings. Though we prepare it, the groupings and subschedules should be signed by the finance manager. Another important consideration is accounting standard and Ind AS compliance. Ind AS is now applicable only for large companies, all listed companies, and companies with net worth exceeding 250 crores only, including NBFCs. Listed companies, big or small. We have listed companies in Kerala. with paid up capital of 6 to 7 crores. In those days, the BSE threshold limit was only 3 crores for an IPO. So therefore, those listed companies, big and small, it is applicable. Otherwise, 95% of our clients are still under accounting standards. Ind AS is not applicable. AS 1, starting with AS 1 disclosure of accounting policies, going up to AS 29, we will see towards a second part of the presentation. This slide deck will have a reference to accounting standards as well. Schedule 3 compliance, because the format is important. We agree that it is always the thrust is on substance over form. Substance over form is a very important thing, but the legal form is equally important when it comes to company audit. The format is given in Schedule 3 and amended revised Schedule 3, huge changes. Those who have gone through aging, they feel that whatever is old is bad. So aging of notary debtors, and debtors, it is not now 6 months, exceeding 6 months and more, less than 6 months. Less than 6 months, 6 months to 1 year, 1 year to 2 years, 2 to 3 years, and total. Disputed, undisputed, all those. It's a huge amount of disclosure which are required. Trade payables aging. Aging of capital work in progress and expected date of completion. Aging of intangibles under development, expected date of completion. So on the story goes. We will see that as we go by. But since we have to spend time on standards and auditing, we will defer to the end of this presentation. And lastly, the auditor's report, additional reporting requirements. We mentioned in the first, I think, second or third slide, he said that additional reporting requirements, CARO is very, very important. CARO points, 21 points under CARO 2021, CARO 2020. For your kind information, there's guidance note on Schedule 3 issued by the Institute. Please do refer if you have a doubt. Even if you don't have a doubt. In fact, we have been instructing the students to keep on their desktop, and they would keep that one open. When they have some doubts, they can swap the file and then see whether that compliance is okay. Some of them have been doing it very well. Now, CARO also, there's a guidance note, but please do, if you're referring, the CARO guidance note has been revised. They came out in 2020, but that was in haste, thinking that CARO would be made applicable in that year, that is 1920. The notification came in February 2020. So they said probably it will be applicable from 1920. So the AISB, of course, it is good that it could come out with in a short span of time. And then 2021 also it was deferred. And the first year of applicability of CARO 2020 is what we are auditing now, 21-22. But then knowing that some of the hurried work on CARO 2020 guidance note has not been good. The new version has come, June 2022, the latest guidance note on CARO 20 has been issued. So please refer that to the old one is a little redundant. With due regard to the work which is being done at AISB, I would put it that way. But then we have the latest version. Please do refer to that. So this is the audit process. With that, we will just move on to the importance of standards and audit. They are now layman. The Companies Act also uses the term auditing standards. So therefore, I've used that term. The Auditing Practices Committee was set up in 1982. They were issuing standards and auditing practices. It was renamed in 2002 as Auditing and Assurance Standards Board. I started issuing AAS, Auditing and Assurance Standards. A new preface was issued in 2008. This is only historical importance, but I think this sequential developments are worthy of being noted and being aware of. And with the new classification, today's standards are broadly classified into standards on quality control and engagement standards. Standards on quality control so far, Institute has issued only one, SQC1. Other standards are broadly classified as engagement standards, which is 4 divisions. SA, standards on auditing, standards on review engagements, that is for the limited review that we do for listed companies. SA is standards on assurance engagement. Other than audit, we render assurance engagements as services like certification, turnover certificate, debtor certificate, investment in machinery certificate, plant machinery certificate, for SSI, etc., registration, MSME registration today, all that. That's very important. SRS, standard on related services. SRS 4410, if we take for example, it deals with engagements to compile financial information. Non-audit cases, non-corporate, non-audit cases, compilation of financial statements we do. There is no audit, therefore they are dealt in SRS. So today our focus is on SA, standards and auditing. And why comply with standards is very important. To expedite audits in accordance with generally accepted auditing practices. This is theoretical, but this understanding, I think, is useful. To utilize resources effectively. See, the time is one of very important resources. And today, many of us have a human resource constraint. With again, a 3-year articleship and the MCS and advanced ITT coming into articles, and they have to do it before applying for final exams. Third year, we are not getting the students for as much time as we would like to have them. And therefore, we have to utilize the resources properly, guidance, assistance. Therefore, an audit program, for example, which is emanating out of SA 300 is very useful. So these are reasons, more reasons to go to ensure quality control instead of working on a mental plan. The auditor should have a written instruction manual like the audit program, etc. And in all that we do, like the documentation, the quality control standards that we mentioned, understanding the entity, the processes, audit processes altogether, getting terms of engagement right, getting written representations, all this is very, very important. And compliance with standards are very important to disprove any charges of negligence against the auditors. Now, our country has not become very litigative on audit failures. But in the West, as you see, if you just Google up and see what's happening in the US and other many of the European countries, there are a lot of allegations about auditors when there are corporate failures, particularly public interest entities when they fail. The regulator as well as the shareholders, individually and collectively, they would raise their voice against the auditors, point their fingers against the auditors. So one has to be extremely careful. And to face and pass peer review. Yeah, I was introduced in my introduction, told that I'm a peer review trainer. I do train peer reviewers, panel peer reviewers of the institute. And there I asked this one question is to the peer reviewers, how many of you are confident that your firm, your processes, you personally as a chartered accountant would pass peer review if a strict and objective peer review is done? And many of them are not really confident. So according to me, as a peer review trainer, and my firm has been peer reviewed and we got the OCAT certificate, but I was not very happy with the depth at which it was done. And now the second round is happening now. We're hoping to get a clean chit. Partners also aligned with this thinking, and I think there is a good amount of compliance with the standards and audit processes as envisaged in the peer review manual. So that's very important that we pass the peer review if it's applicable. And as many of you know, that listed companies can be audited only by firms which possess a peer review certificate, which is often referred to as a hallmark of professional excellence. And we have displayed our peer review certificate. Some marketing we do in our office in the lobby. We have displayed our peer review certificate, and we also send a mail. We have a email group of the clients saying that we have been recognized, that the quality standards are up to the expectations of the institute, which are almost at par with the global standards. And therefore, that message we send to the clients. And that is some bit of branding, which we can always do. It's not marketing per se, but that really helps, saying that we mean business and we comply with standards and the regulations effectively. This is what ma'am was, chairperson was referring to, Companies Act 2013. We saw the sections 143, powers and duties of auditors and auditing standards. In that 143.9 is a single line provision, single line subsection. Every auditor, not every company, not every board of directors, every auditor shall comply with auditing standards. Now, what does this mean? From 1982, when APC was set up, renamed, etc., 82 till 2013, how many years? 18 plus 13, 31 years. Institute has been issuing standards, and Institute said, a member, look here, practicing chartered accountant, practicing a member of the institute, look here, they are mandatory standards. So if they're not complied with, if there's a disciplinary issue, if there's a failure, we will take you to task. But members were not taking it very seriously. But with 2013 Act coming in, it has become part of the law book. It becomes part of the statute which governs the companies. And any failure, the MCA can take action. Now the MCA also, you have NFRA also. The NAFRA, the National Financial Reporting Authority, set up under 132, which is taking strong action against many of the erring firms. You know what happened in IL and FS? 92,000 crores of irregularities, and one of the multinational firms, they have been found fault with. And the 309-page report talks about, in very simple terms, the crux of the NFRA finding is simple but disturbing. This reputed multinational firm failed to obtain sufficient appropriate evidence to form their opinions thereon, did not obtain confirmations, did not get management representations proper, did not counter-check with the industry standard. So on the story goes. Therefore, the very important is that to understand the standards in auditing, precisely why the council is worried that members still not complying enough with standards in audit. So we will now go to the specifics, but before that, person from your state, I think, Mr. Injeti Srinivas, when he was MCA secretary, he made a comment on the profession or the way the chartered accounts are disposing their responsibilities. In about audit failures, he made a reference saying that we do not expect the auditors to find a needle in a haystack. A needle in a haystack is very difficult to find. To that extent, you don't have to investigate. But at least they must see the elephant in the room. It's a very strong message. It's a very strong message, and we have to take it seriously. I always do this before we do essays, because in the largest sphere of audits, small and big, but largest sphere, all the more important, public interest entities, there are public shareholding, institutional shareholding, huge amount of loans from banks, financial institutions, foreign institutions. There are VC investors, PE investors, all this. So the stake is slightly different. The stake is completely different. And the auditor acts in a fiduciary capacity there. And he has to come up and say, hey, look here, this is what we have to do. And these are the irregularities. And he has to blow the whistle. And we have been saying that the auditor is only a watchdog, not a bloodhound. This is not an insurance policy to which the profession and professionals can hang on for a longer time. The regulator thinks differently. This is an indication of what Mr. Srinivas said. Now, in one of the programs where Amarjit Chopra, sir, past president of ICA, was addressing, he was making this remark: we are, anyway, we are dogs, watchdogs, not a bloodhound, watchdogs. Anyway, we are dogs, so at least bark, please bark. So it carries a very strong message. The jokes apart, it carries a very strong message. With that, let us move on to understand the importance of standards. We'll touch upon these standards. First one is SA 200. This talks about the overall objectives of the independent auditor and conduct of an audit in accordance with SAs. I'm not going through the entire contents of the standard. It talks about integrity, independence, objectivity, confidentiality of information, all the basics. This is actually the runway. This is the runway for all other standards. For example, SA 200 says the auditor should document his work properly. The auditor should document his work properly. This is expounded in SA 230, audit documentation. This SA 200 says auditing be an organized activity with a clear objective of expressing an opinion. The auditor should plan his audit well. It is expounded in SA 300. But here what I want to highlight is, after this renaming and then reframing of this SA 200, the term professional skepticism has today been very loudly said. Let's be a little skeptical about this. What is skepticism? I did mention, auditor can't be just a watchdog anymore. An attitude that includes a questioning mind and being alert to conditions which may indicate possible misstatement due to error or fraud, and a critical assessment of audit evidence. Being a little doubting, be a little questioning about how can that be. Recently, we are being engaged, not yet finally signed up. We are being engaged by an entity which is into export of marine products. Just to charge, that's a problem. Just give me a minute. It's charging now. There was a loose contact. I'm sorry. I'm just giving this again. So we're being engaged. So this entity is a turnover of about 15 crores and perishable marine products. You know what the inventory is? Inventory is more than the turnover. And inventory is at cost. Turnover is with your markup. So there itself, at a glance, at looking at the P&L and the balance sheet, we said there is a problem. So if you say that, okay, stock, yes, that's a stock statement. And stock statement is not enough today. If you look at standard like SF 501, very clearly says that the auditor should ensure, be possible, be physically present. Be physically present for stock verification. Ensure that the stocks exist, they belong to the entity, that they are not billed. For example, year-end billed stock may still be included in closing stock to paint a rosy picture. And they are in good and saleable condition, that there is no deterioration value, etc., etc. But how many of us are doing it? During COVID time, EY Batley Boy in Pune engaged our firm, my firm, to do physical verification of an entity which is an industrial area, inventory or physical verification of inventory in an industrial area near Cochin. And they what they did was the entire process of physical verification by my partner and my team was live video streamed. And it was recorded, it was kept as audit evidence. How does that sound? Do we bother? Similarly, we have a client who is having some stock in Kolkata. And since I have someone who's there in Kolkata, I'm going to do the same thing. I'm going to authorize him. I told the client, authorize him to go to the client's place and do. One is that do the verification with reference to the stock registers and take photographs and take a few samples and be done. This doesn't cost you much, but gives you comfort that there is inventory. So otherwise, how do I know whether this Calcutta inventory, which is about 20-30 lakhs, though the amount is not very small, but big. The company has a turnover of about 7-8 crores. Calcutta inventory is only 30 lakhs, 30-32 lakhs, if I remember correctly. There should be some this thing that we are doing it current now, almost 5 months over. But then at least this point of time, you have the stock register and some kind of a comfort. 31st March, we did not go. So being skeptical, it's all right to be skeptical. There's a term in the Holy Bible, which is, I'm not talking religion. It's called the doubting Thomas. Thomas is a disciple of Jesus, would trust and believe only by touch feeling Jesus that he has resurrected. So there's a term which is globally being used without reference to religion. So I'm using that term. And auditors say that everything is okay, should be okay, because this is a client with me for 20 years. The older the client, I personally feel that the risk is more. He would take things for granted. He would take the auditor for granted and information say that I will give you, why do you worry? But then concerns are different. Audit evidence that contradicts other audit evidence, extra evidence should be obtained. Some more about, I put it that question. Information that brings into question the reliability of documents, responses to inquiries to be used as audit evidence. Sometimes signature mismatches, some fake invoices, all those things are happening. One has to be extremely careful. Conditions that may indicate possible fraud. Now, there's a remote location. For example, you are Vijayawada, you have a client who is having a facility in Vizag, for example, and nobody from the management goes there. So some kind of malpractice can happen. Reports are not forthcoming, etc., etc. Sales inventory is accumulating. No sales are happening. Amounts are not getting collected. Then later you come to know that amounts have been collected in cash and defalcated. That can happen. and circumstances that suggest the need for audit procedures in addition to those required by this. Additional procedures, even additional procedures, to an extent we do a bit of an investigation. So this is what professional skepticism is. I'm highlighting this from SA 200, the first standard on auditing, and that gives us a clear idea about how we should go about. Be a little questioning. Don't take things for granted. Not only documents, also people. In Kingston Cotton Mill's case again, it was said that the auditor is justified in relying upon the words of tried servants of the company. But tried servants can also be fraudsters. Today there are fraudsters everywhere. Self-interest is at its peak. Therefore, the audit has to be extremely careful. That brings us to the next standard, which many of us do not comply with at all. Agreeing on the terms of audit engagement. In our office, we call it LOE, letter of engagement. We have to get a letter of engagement, issue a letter of engagement, and get it signed by the client. Objective and scope of the audit, responsibilities of the auditor. The format is given as an appendix to SA 210. Or you Google up, you'll see, or I can also share with you. There's no IP in that person. But we must get the letter of engagement. This year particularly because, again, this has to be changed because audit requirements have changed in CARO as well as Schedule 3. Responsibilities of the auditor, responsibility, what is that management is supposed to do. This will sound theoretical, but once you read through SA 210, it tell you how important it is to make sure that the client has asked you. Client is committing that, though in practice it may be slightly different, maybe fully different also. But from documentation perspective, it's very important that we make the client say that it is our responsibility to prepare financial statement. That'll put you in good stead when you are in trouble. That will be a good shield for it. A line of defense for it, very strong line of defense for it. Identification of the applicable financial reporting framework. The financial reporting framework is Schedule 3, very important. Reference to the expected form and content of any reports to be issued. I think the slide is slightly incomplete. To be issued by the auditor. SA 210, the very, very important step. So the practice point is, if you are not obtaining letter of engagement, please do issue a letter of engagement and get it signed by the client on a date prior to the commencement of the audit. SA 210, we are going standard by standard. Quality control for audit work. I did mention there is SQC 1, which is standard and quality control. In addition to that, I feel that this should not have been there. SQC is a quality standard, and why have an essay on this? But it is actually there, mandatory standard. Dealing with specific responsibilities of the auditor regarding quality control procedures for an audit of financial statements. This is to be read in conjunction with the relevant ethical requirements and SQC also. Quality control, if you ask me, quality control, if you ask me, the crux of the standard, there are two things. One is the audit team. If you are a sole proprietor also, you have a team of people. The quality control is something which, like a QC policy, quality control policy should be very clear. That we will do audits in compliance with standards and auditing, and issue standards in compliance with all the requirements, including the membership number, UDIN, etc., all those things. So to have that kind of processes in place is very important. Equally important is to have an audit team. How good is your audit team? How frequently do you inspect them? How many of them are attending this program? Not because I'm the speaker. Okay. Ratna Prabhakar Saab has a query on small company. Probably we can take it now or towards the end of the session. If you can unmute yourself and ask.
It's up to you, sir.
Yeah, I think we can take a question now. We'll have a. Okay, sir says end of the session only. Fine. Okay, fine. Yeah. But do have the questions typed in the chat box if you have. We will take all the questions and try to answer. Okay.
Sir, Chinnaswamy, sir, Jaman, sir.
Yeah.
There is a participant by name Chinnaswamy Ganeshan in the participants list. I wonder if he is a Chins as called by MPV, sir.
Yeah, so, I think it should be Chins only. Then I should be very careful. He is an authority. I think I will stop and ask him to continue.
No, sir, the man of his stature who knows the accounting standards, auditing standards, he want to listen to you. So we are
Not really,
fortunate
not
that
really. We are good friends. I do not miss any occasion to listen to him. And he has a special liking for, I'm not becoming Kerala specific, but Kerala branches. And he's just a call away for me. And in spite of being a very busy professional.
one thing.
Happy to know that.
What we have to learn is, even how much we know is not the question, but we should get updated or revise even
Correct.
now and then whenever we have an opportunity.
Learning is a continuous process. I attended one IFRS training program in the Savera Hotel in Chennai. And I have the privilege of saying that Padma Shri T.N. Manoharan was my batchmate. I saw him taking out notes, Manoharan sir taking down notes with the IFRS book. Taxman publication was there. So then that is a kind of learning which all of us have to do. So they all inspire us. If it is chins, it's a privilege to be. And we will have, now my job is made easy. Ask any kind of questions. Simple ones I will answer. Difficult ones, Chinsami sir will answer. Okay, Ravikishore sir, I will proceed.
Yes, please. Yes, please.
So QC standard is a detailed standard, but since we have to cover so many standards, we are running through all the standards to bring about awareness. And moving forward, we should have more sessions, but maybe this audit season will come to an end. But again, that awareness there's a continuous ongoing exercise of updating this. So this essay deals with, I did mention. So first is about the processes. Am I complying with standards in auditing as required by the regulatory requirements of ICA and today under 143(9) of the Companies Act 2013. The second thing is about having a team of people. Every firm, well-meaning firm today should have in-house training, in-house awareness programs, very frequent meetings, training programs, and some of the good programs organized by branches and also by SICASA, some of the student organizations, very, very active. And they also invite eminent speakers. And therefore, I think that training has to be ongoing. See, this year on Schedule 3, CARO 2020, how much do you have to explain? And therefore, we have had in our office many sessions, I think 3-4 sessions, and we also make the students, senior students to do the presentations. And we have MCQs, like today what CPA Directorate is asking for. So all that's very, very important. So SA 210 is about quality control for audit work. The firm should have a quality policy. Someone should honor for the quality. There should be the engagement partner. In firms with multiple partners, the engagement partner should be there. The audit manager should be made aware and responsible for all kinds of quality requirements. And the processes should be documented. And the team should be charged up, geared, instructed, supervised, and reviewed. I would put it that way. Sir, SA 230, I think we'll go into SA 230, which is audit documentation. We hear this as a cliche, we hear from all the speakers that the big four firms do a lot of documentation. It is quite essential. Today, we are under the lens than ever before. The regulator is very strongly, I think with some negativity looking at the profession, not without reason, but then we have to be very careful. So to prove that the audit has been done well, we should have documentation at every stage. The nature, timing, and extent of audit procedures performed comply with standards in auditing and the applicable legal and regulatory requirements. So documentation earlier, SA 230 used to talk about permanent file, current file, and all that. Today, with a lot of digitized documentation, those terms have gone off, been done away with in the revised SA 230. But the key aspect is your documentation sufficient to establish that you have done the work properly, audit work properly. Properly meaning, again, in compliance with standards in audit. It could be a letter of engagement, say letter of engagement. I was seeing in one of the cases, there was a finding. The QRB, the Quality Review Board, we have different levels of reviews today. We have FRRB when it comes to financial reporting, QRB when it comes to audit quality, and today all of us talk about AQMM, audit quality maturity model. So whether all this is actually working out, we have to see whether, say, subsequent events, for example, there's a doubt about the collectability, realizability of a particular receiver. And now we are doing the audit in August. What have you been, did you seek information about the behavior of the particular receivable or that particular debtor customer in the last 4 or 5 months. And if payments were forthcoming, you were largely justified in saying that the receivable which showed as on 31st March is true and fair, but otherwise not. If that turns out to be a bad receivable or bad debt, then there is a fault on the part of the auditor that this is standard subsequent events. One should be aware of that, and that should not be forgot. Like we have events occurring of the balance sheet at accounting standard 4 and so on. The results of the audit procedures performed and the audit evidence obtained. What should be documented, we are listing on. And significant matters arising during the audit, conclusions reached thereon, and significant professional judgments made in reaching those conclusions. This may sound theoretical, but these are very important aspects. Those who are auditing in the listed space, you have say 701, key audit matters. The key aspects which the auditor thought relevant should be discussed at a higher level of the management. And how did the auditor, what is the auditor's key audit matter, and what is the management's response? That has to be listed. Today, listed company audit reports in a columnar form. The key audit matter, management response. They give many 4 or 5 items, more than that in some cases. So for all that, this documentation is very, very important to establish that you have done the audit properly. I'm skipping some of the other standards. 240 is fraud, 250 is consideration of laws and regulations, 260 communicating with those charged with governance. I think we need to discuss a brief on that. SA 260 is communicating the audit findings. So at least in bigger audits, there should be a practice of giving your audit observations. We use that term audit observations. What are the audit matters? What are your findings during the audit? And do seek a response, written response from the management. It's a mandatory requirement, which is there in SA 315 also in a different form. And therefore, that's very, very important. 300, planning and audit of financial statements. The auditor should develop an overall audit strategy and a detailed audit plan. Now, auditing is an organized activity and with a very clear objective of expressing an opinion. For that, he needs evidence. The auditor needs evidence. Auditor need to move on a particular track. It's called the audit trail. And for that, the auditor should first have an overall audit strategy. So it talks about an audit planning memorandum. It could be a 2-pager saying that, okay, these are the aspects. This is the materiality level set. This is the extent of checking what is required to be done. And so on it goes. And finally, that's how it is. And we call it the APM, audit planning memorandum. And as a footnote to that, at the end of it, there is an end note saying that the audit be done in strict compliance or in accordance with the detailed AP of the firm, audit program of the firm. That is how planning has to be done. And planning is not a one-time exercise. We say that, okay, first 2 days of the audit for planning. It is not that. You may do planning even before commencement of the audit, through the audit, and even just before the conclusion of the audit. You may have to look into certain aspects, replanning rather, or relooking at your strategy and probably, amending your strategy a little bit to be more focused and be able to give a fair opinion. Sorry, SA 315. This is actually a combination of 3 earlier standards: knowledge of business, assessment of internal controls, and the evaluation of audit risk. See, many of the cases we see that if you ask me, audit at various levels, transaction analysis is all about relevance. Is a particular transaction relevant for the organization? An irrelevant transaction should not be captured. Unrelated transactions should not be captured into the accounting system. And finally, whatever the accounting system has ends up as a report to the shareholders. Not shareholders today, stakeholders. The balance sheet, P&L, and the cash flow. Cash flow also today, we'll see as we go by. Cash flow statements are also part of the general purpose financial statements as defined in 2 subsection 40 of the Act, which says financial statements include balance sheet, P&L, income and expenditure for Section 8 companies, cash flow statements, and SOSE also. But for the time being, SOSE is only for India's companies. So cash flow statements, except for small companies, dormant companies and OPCs, cash flow statements are also mandatory. Not by virtue of AS3 alone, by virtue of Section 2 subsection 40. Please keep that in mind. Many of us are not doing. So coming back to SA 315, it's very important for the audit team particularly for the students, that to know what the business is, to know what is relevant, what a relevant transaction is, and understanding the entity also. This talks about knowledge of business, entity-specific knowledge, industry-specific knowledge, and the auditor is also expected to have, not without reason, expected to have a macro understanding of the mood of the economy, the economic environment in which the entity operates. This is very important. So that's where the auditor's responsibility is. Based on that, the auditor would assess the audit risk. What is audit risk? Audit risk in brief, or on a macro scale, if I put it, audit risk is a risk of expressing an inappropriate opinion. When things are not clear and fair, the auditor finally ends up saying the financial statements give a true and fair view. Because there is detection risk, there's a control risk, the inherent risk, and so on. Various components of risk, which I'm giving a clue for the MCQ. Madam has sent me a list of MCQs, I think, given by CPA Directorate. I had given another set of MCQs, but then this has already been given. This is very important that we understand the entity, its environment, and based on that, we would risk what is the audit risk. Here, we don't talk about business risk, but that is very clear, SA 315. And that should be documented. In our audit program, we always have put an instruction that prepare a general note on the businesses of the company and new lines of businesses even started during the year. See, for example, a home loan company during the year would have diversified into, let's say, two-wheeler financing, vehicle finance, or gold loan. Today, NBFCs are playing a very major role in financial inclusion. There are many, well-managed companies which are doing in the listed space in the NBFC scape of things. We have the Muthoot Finance Limited in Kerala, and a lot of companies, Equitas, all of them, NBFCs, there's a plethora, a large number of IPOs by NBFCs at that point of time. They have come to be recognized as an essential part for financial inclusion, because the banking penetration is not sufficient in smaller towns. So chota, small chit companies, some of them today have upscaled to NBFCs, registered, well-run NBFCs with internal audit, regulatory company secretaries, internal control evaluation on a regular basis, board meetings, independent directors. That's good. So I'm just talking about the situation where this home loan company, which is predominantly there, started a new line of business into vehicle financing, or we would say that trade financing, or anything of that sort, gold loans. So therefore, again, the audit program, the audit approach will have to be, refabricated to cover that new line of business as well. That's very important. In the series of 400, we do not have many important standards. Now SA 500 is audit evidence, a very, very important standard. SA 200, in brief, says, very briefly says, the auditor should obtain sufficient appropriate evidence to have assertions on the financial statements, financial information, so as to form an opinion thereon. So this is expounded in audit evidence. To design and perform audit procedures to obtain sufficient appropriate audit evidence to draw reasonable conclusions to base his opinion. What is evidence? Anything that can be relevant in helping the auditor to form an opinion can be evidence. It could be written evidence, it could be oral evidence, but less reliable. Visual evidence, documentary evidence, that is, written evidence. It is also external and internal. Another classification of evidence is external and internal evidence. Internal evidence is generated within the organization. External evidence is coming from outside the organization. External confirmations, that's a mandatory standard. SA 500 series is all about evidence. SA 505 is on external evidence, external confirmations. A written confirmation from a debtor that this is the amount which he owes to our auditee. A written confirmation from a bank on the bank balances, guarantees outstanding, LCs, FDs, all those things. A confirmation from a bank that they are holding the original of a title deed, for example. Yes, that is external evidence. the confirmation given by a consignee saying that I'm holding so many items in stock of this particular company as a consignee is evidence. A job subcontractor, outsourcing agent saying that so many units are under process with me as at the end of the year. They're all evidence, external evidence. So the auditor should obtain evidence, not just obtain evidence, evaluate the evidence, reliability of evidence, and corroborate as well. What do you mean by corroborate? The evidence obtained from various sources have to be related, collated, and if it matches, well and good. But if it contradicts, you should go for a deeper dive. That's very important. So that is what SA 500 is audit evidence. Are we collecting important evidence? If not, we should collect evidence, insist on external confirmations, etc. And again, I reiterate that audit is much more than, audit is not compilation of financial statements, but at every sphere. If we go to Mumbai, Delhi, everywhere, we hear from chartered accountants that unfortunately, we have to help the client in preparing financial statements. But that should not be mistaken for, or rather understood for an audit. Therefore, this is very, very important that the auditor should collect evidence. SA 501 is an offshoot, rather extension of audit evidence, SA 500. Specific consideration for selected items. They have taken three things, highlighted three things for which the auditor should have specific considerations for selected items. In addition to all that considerations which I mentioned, all the requirements which are contemplated or rather required in SA 500, the auditor should collect specific items. He should have special focus. Look at this. The first one is inventory. The requirement is the auditor should, I did give this example, the Batley Boy example, where there's no secret because a listed company, and I'm talking about a good audit practice, which everyone it can be imbibed, it can be practiced or copied and practiced. Therefore, I'm highlighting that again. So there should be some way where the auditor should physically be present, either through authorized representatives. If you have many clients, it need not be at the year end. It could be 1 week before, 1 week after, 2 weeks later, ideally on the closing when physical verification is actually being done. And you don't have to count and weigh physically. You have to oversee and make sure that there's a process, that the stock, that documents are there, it matches with the stock records, etc., etc. And therefore, that's all very important. If you're not doing it, let's do it and document it. Litigations and claims involving the entity. See, there could be litigations which can shake the entity. I would say that the subtraction of the entity can be affected by huge litigation, by huge demand. It could be on a GST violation, either an oversight or an intentional fraudulent violation. There could be huge demand. Income tax, there could be a demand, etc., etc. And therefore, all those things, the auditor should get all the possible evidence, written representations. If required, have a communication with the legal counsel of the entity. The guidance note also talks about, the standard also talks about the verifying the legal and professional charges account. In the new Schedule 3, there's a particular requirement. Benami transactions, Prohibition Act. There a company has been taken to task. So there it is possible that the company would say, so there is no such issue. Or you go to the legal and professional charges, you come across a particular payment saying that paid to advocate or chartered account for representing for under the Benami Transactions Prohibition Act. Then you have the evidence. Then it's contradicting the evidence. Not only that evidence, at that point of time, the reliability of that particular person, the trust you had that person, whatever he said, is fully shaken. So you have to go back and see what or the assertions which are made may not be reliable. He may be the wrong mouthpiece or mouthpiece of the management for hiding things or giving wrong information to the audit. Actually, that can happen. We talk about the forensic audit, that goes next level goes on. And to some extent, some places we have to go deeper and become an investigator or a CBI for that matter. So litigation claims involving the entity, the entire thing has to be got disclosed. And if it has become a different liability, a litigation, if there, maybe it has to be provided for by hit in the accounts. If not, it should be shown as a contingent liability. Segmental information, this is as of now only for listed companies and larger entities. SMC, small and medium companies, are exempted from AS 17 segmental information, but wherever AS 17 is applicable, the whole process of identifying reportable segments, business segments and geographical segments, primary segment and secondary segment, the reconciliation with the overall position, all those things the auditor should carefully look into. So specifically, they've taken 3 things. There could be more items, but as of now, SA 501 deals with inventory, litigations, and segmental information. 505, we did make a reference to while we were at the SA 500, external confirmations. The reliability of audit evidence is influenced by its source and by its nature and states. Audit evidence obtained from independent sources outside the entity directly by the auditor is much more reliable than the evidence obtained indirectly or by inference. Some of you would know or probably recall that after the Satyam issue happened, many of the larger firms were obtaining bank confirmations directly. Of course, without informing the client, they were not even routing it through the client. They're getting confirmations directly. So even in the case of circularization, which we do for debtors and creditors, it's better that we do it directly, not through the client. So that is a point of relevance. It enhances the reliability of audit evidence. And we have seen that documentary evidence is substantially more reliable than whether it's paper form or electronic or, as we say, digitized form. This is perfectly okay, but it should be documented evidence. So external confirmation is not about just year-end bank confirmations, bank balance confirmations, debtors, creditors, loans taken, loans given, documents of title held, originals of documents of title held by them, inventories held by consignees, sale or return agents, subcontractors, etc., etc. All that's very important in India and abroad. So external confirmation should be obtained wherever possible. And if it's not there, you also look at the subsequent events. And if there is some big doubt, a huge doubt about the reliability, etc., you may go for a modified opinion. When I say modified opinion, a reference is to SA 705, which talks about how to qualify a report. And if not, if it's a lesser, you have a level of doubt is lesser, then you may even end up with the emphasis of matter paragraph. In some cases, I've seen that when it's not really warranting a qualification, we would go for emphasis of matter paragraph, again, guided by SA 706. So the point here is obtain external confirmations on whatever is relevant, at least large balances, doubtful balances, all the more so, non-moving balances, all those things we should have a separate stratification process, audit sampling done sensibly. SA 230, that's on audit, so not SA 230, SA 530 is on sampling, we're coming to that properly. Yeah, using external confirmation procedures, auditor shall maintain control over external confirmation requests, including selecting the appropriate confirming party. I did mention about that. Designing the confirmation request, including determination that requests are properly addressed and contain return information for responses to be sent directly to the auditor. We did mention that. This is an explanation of that. SA 510. In one of the earlier slides, on the audit processes, the first thing I started was opening balance checking. So initial engagements, particularly so. Now many of us do audits. It's a change due to audit rotation, or sometimes due to auditor's resignation, etc. A new assignment comes to us. Audit opening balance checking is not, that also we don't do it. Earlier, when the hard copy is available, we'll put a tick from the previous year groupings, subschedules to the current year ledger. So today, the matchmaking is done in the system. The students do that. There's Excel matching, or there are programs which help us do the matching. But it's not just making sure that the balance are brought forward correctly from the previous audited accounts. Sometimes we do it even without reference to audited accounts. The final copy of the signed audited accounts with subschedule should be obtained, either hard or soft copy. And then this has to be done. And also making sure that those balances are sustainable, maintainable, true, fair. For example, in the audit, when you're doing the audit of an entity for the first time, there's a ledger account called land for, let's say, 2 crores. Previous year also it is 2 crores. Will you stop there? The standard says no. You should ask for, because the first audit that you're doing, where is the title deed? Where is property? What is this used for? Original title deed, etc., etc. The original is with the banker. Again, SA505. Get a confirmation from the banker that the original of the sale deed or the title deed for so many cents of land in survey number, etc., etc., belonging to the company are held by us or kept as security for a term loan given to them. To that action, we should really check. And appropriate accounting policies reflected in the opening balance have been consistently applied. What are the policies which are being followed? Accounting policies. Significant accounting policies would have been. I'm hoping that the previous auditor also would have disclosed all the significant accounting policies, because it's a mandatory requirement, AS1, disclosure of accounting policies. And those policies are being continuously or rather consistently applied and followed. If not, it should be based on only based on circumstances given in AS5, where it is justifiable to have the policy change, and that those policies are fair policies, ideal or befitting to this particular organization. The methods of depreciation followed, the foreign exchange transactions, all those things, treatment of fixed assets, depreciation, government grants, revenue recognition, all those things. Borrowing costs, related party disclosure, of course, it's a disclosure standard. So conceptual standards, all of them have been duly complied. SA 570, going concern. Now we are breathing a little easy. The COVID having subsided, the uncertainties which brought into the whole spectrum of businesses, every other business, probably except IT and essential commodities. Most of the sectors were so badly affected. Sitting in Kerala and Tamil Nadu and Andhra Pradesh also, a lot of tourist destinations, even pilgrimage destinations. They were all in major trouble, in the sense that the travel was restricted. So travel agencies, for example, all of them were completely stuck. Overseas travel is fully blocked. But then going concern, here the issue is many of the businesses, if there have been persisting issues, you smell the rat, feeling that the business is almost reaching a dead end, then this SA 570 is triggered. 570 lists a large number of examples or situations which probably would make you think that, oh my God, is it safe to have going concern assumption, to assume that this is a going concern. Going concern, by definition, if you look at AS1, consistency, accrual, and going concern are basic accounting assumptions. They need not be mentioned as part of your accounting policies because they are not policies. Going concern is assumed to be in place, but I beg to differ, particularly in the wake of the black swan events, one-off events like COVID, etc. They cannot be an accounting assumption. Accrual and going consistency to some extent, even that. Today, at many point of time, we have to view it with an eye of suspicion, like with an iota of doubt. So therefore, going concern evaluated, the entity has today no major concerns in going forward. And today in CARO 2020, you know that there is a reporting requirement which talks about the company's capability of meeting its liabilities into the year after balance sheet, 12 months from the end of the balance sheet. So therefore, this has to be seen, and all of us were stuck with 570, and I'm sure that Chinsami Ganeshan sir also would have discussed in many forums about the importance of 570, the 570 getting triggered and getting invoked in the given COVID situation. But many of the concerns there are faded out, and some of the entities have died out also. Where going concern, we would have expressed a doubt, and they failed to go on as a concern in continuing to be in business. Therefore, that's very important. This is standard. Assess whether material uncertainty exists related to its conditions that may cast significant doubt on the entity's ability to continue as a going concern. Going concern is a major concern. So SA 570 tells us as a mandatory standard, do look into check whether there are situations or which arises suspicion, a doubt as to, or casts a doubt on the ability of the entity to move forward. If not, then the whole process changes. Whole approach changes. Even tangible assets, long-term tangible assets, not current assets, non-current assets may also have to be written down to realizable value. Because you're going to shut down lock, stock, and barrel. And therefore, you may put the land for sale, the factory on sale, the machinery on sale, etc., and not just the inventory. They have to be written down. There's a possibility of an OTS, one-time settlement by a financial institution. So liabilities also may have to be written down. All those things have to be considered. That's a very, very difficult exercise, and the auditor has to essentially put detailed notes and also invite, if going concern is a doubt, and then the entity still prepares financial statement saying that we have the resources to go forward, then the auditor may have to qualify his report, even go for an adverse report in certain situations. But here, one thing which the auditor should be aware of is something not related to the standard. I don't know whether you have started hearing this term, revenge economy, revenge spending, revenge tourism. Because many of these tourism destinations today, which had almost come to a halt, they had kind of, retrenched employees, stopped operations except the minimum maintenance, etc. But those who survived today, particularly in Kerala, I traveled to Kumali, if you have come to, near Thekadi, recently for a Pondicherry branch, Munnar for Coimbatore branch, Kumaragam for other few programs, CP programs. All these are hill stations, and the other one is a backwater destination. All the resorts, not only weekends, even during weekdays, many of them are fully booked. So which means that people who have not been able to travel, have resources, who are resourceful, are now bouncing back with the revenge. This could probably be a justification to reconsider going concern, and therefore that one should keep in mind. SA 580 is a very, very important standard. It's a mandatory standard, very important standard. See, during the course of an audit, the management or people who associate the accountants, the team of financial professionals, the GM finance, everyone would make a lot of representations, saying that yes, sir, it is there. Yes, sir, it is there. Stock we do every week. We do physical verification. Debtors are all realizable. We have only this many bank accounts, no other bank account. Inventory is there, sir. Don't worry. All those things. But this is not enough to have oral explanations. How much ever senior the person is, whatever level it comes. SA 580 requires the auditor to obtain written representations. They're called MRL, Management Representation Letter, with all that is relevant. All that is relevant. Today, look at the information which the management has to give in Schedule 3. Look at the reporting responsibilities under CARO 2020 on the auditor. On all this, we have to get written representations from the management. And let me tell you, this LOR, we call it LOR, Letter of Representation, or MRL, Management Representation Letter, is not a substitute for audit evidence. It only gives additional comfort to the auditor. The auditor, in addition to collecting all the evidence through substantive procedures, still feels that he should make the management confirm, assert, affirm on all these things which they have discussed during the course of the audit. That's very important. So written representations do obtain. So the action point, as we discussed in SA 210, two new things if you're not doing is, one is get a letter of engagement. Two is get a written representation. SA 300, now quickly jumping back to SA 300, audit planning. From now onwards, I'll have an audit planning memorandum, discuss with the team and document it properly, signed by the partner or engagement partner or at least audit manager. And then also by the SA 300, the audit program, with a detailed instruction manual, which I'm not doing, but I will do it from now on. Those kind of cultural change at the workplace has to happen. That's the way I put it. Written representations is to support other audit evidence relevant to the financial statements and specific assertions by means of written representations, if determined necessary by the auditor or required by other essays. We did mention that. This is an expansion of that. That brings us to, oh my God, somebody's shooting. Yeah. This is brings us to the roundup of SA 700. So reporting standards, SA 700, 705, and 706. SA 700 has been revised. The revised standard starts with the opinion. Earlier we had the introduction. The first paragraph is on the opinion. First is about the opinion. Yes, so and so is a good boy. The company's financial statements give a true and fair view. Then is a basis for opinion. Basis for opinion is where, basis for opinion is not always a clear report, clear opinion, clean opinion. It could, if it's a qualified opinion, then the basis for qualified opinion paragraph. It will become basis for qualified opinion paragraph. Basis for emphasis of matter paragraph. Basis for adverse paragraph opinion. And the opinion you would refer, saying that except for matters specified in the basis for qualified opinion paragraph, the financial statements give a true and fair. That's a qualified opinion. But when you start saying except for 1, 2, 3, it's a long list. Then what happens is the auditor would pause for a minute and say that, oh my God, this cannot be a qualification. This has to be adverse, saying that financial statements do not give a true and fair view. And the endeavor is a qualified report, emphasis, or the adverse report, disclaimer also. That is in SA 705. Disclaimer: the auditor should give the complete reasons. Going concern, yes, that has to be done. Key audit matters, now SA 701 limited only to listed entities. But also the standard says, or in situations if it so badly warrants, not the term exactly, if it is so warranted, the auditor may use SA 701, even in non-mandatory situations. Management responsibility is a very important paragraph in the auditor's report. What the management is supposed to do, very clearly spell out and discuss with the management. This may not happen at a very small private limited company audit level, but where there is a reasonably big size, equally applicable, but in practical situations, you have to discuss this threadbare and management responsibility, auditor's responsibility, other reporting responsibilities, legal and other regulatory requirements, all those things we have to mention, signature, date, place, membership number, UDIN, etc. All those things, 705, since we have discussed, I'm just skipping. Emphasis of matter paragraph is emphasis. EOM is a situation where the auditor feels that something has to be highlighted to the users of financial statements. It could be a banker, anyone for that matter, to whomever he is holding on. But it's not as intense, severe, grave as that to invite a qualification. So therefore, on a lesser, softer situation, he would invoke this SA 706 and put it as an emphasis of matter paragraph. And therefore, that is importance of SA 706. Paragraph. So that brings us to the end of the important practice-based standards. With that, since we have some more time, we will, Madam, we will probably take a break in the sense that we'll have some questions taken if there are, either through chat box or through the members can shoot questions if they can be unmuted. Chat, there is something in the chat. A private company having turnover below 20 crores and paid up capital below 2 crores, having borrowings more than 1 crore, whether CARO 2020 is applicable or not. So that's a question which is being asked very frequently, but the guidance is not very clear. I would hold a slightly different view, but the guidance note tells us that a small company, if it's a small company, you are exempt, and the other irrespective of the other considerations. So therefore, going by that, if you're a small company, you are exempt from the applicability of CARO 2020. As per new audit report changes and reporting under emphasis of matter, can you please explain with example? In the case of emphasis of matter. Yeah, SA 706, in one of the cases where a leading firm had mentioned about the realizability of a receivable, which is not, which did not warrant a qualification. So therefore they said receivables amount is so many crores has been confirmed, but they use the term like looking at the behavior, or rather way the account is conducted, etc., etc. What did he say that, finally in the AOM we say that the auditor says that, however, our opinion is not modified in that matter because it's not a qualification. So he's highlighting there is some kind of a receivable which is slightly, it is not saying that it's definitely not receivable, But situations are where it is something, there's some bit of a doubt about the full realizability of the amount, etc. That is one example which comes to my mind quickly as this question for this question. But please do refer SS 706, sir. 706 will give you a lot of examples there. I'm not escaping my responsibility towards that. If Chinsami sir can add, if he's still there, can add on to that, it will be nice. I think I've answered those two questions. Ma'am, you can unmute the participants and probably if they want, they can ask questions directly. So maybe some of the senior members have a problem in typing in the chat box.
Sir, everyone is free to unmute themselves, sir.
Oh, okay.
Permission is given. Permission is given.
Friday evening, 7:30, maybe members are, I can understand. If you have been working all day. In Kerala, we have taken the Onam break. Yesterday was Onam. We call it Kerala's national festival. And today also many of the offices are closed. We have a long weekend tomorrow and we have a 5-day break because 7th is Onam celebration at the office. We had the Onam Sadhya, the plantain leaf lunch we have with the 20-25 different types of curries and all that. And yesterday was Thiruvanam, which is a complete holiday, state holiday also. Today and tomorrow, of course, a long weekend, and we'll meet up only on, so no programs in Kerala. So if you had a long working day, I think we'll move faster and round up. Okay, Chairman, with your permission. Yes. So these are the important standards one should keep in mind. So before I move on to the other aspects on what is new, please have a clear understanding that essays are to be applied mandatorily by the institute, they are mandatory, and also under the Companies Act. Please improve the level of compliance. The institute is doing a lot of work on this. I did mention 17 years back as a much younger member, I had attended all the 11 meetings of AASB. I think Chinsami sir also was served both the ASB and AASB. He would agree with me, the work which goes into the preparation of standards. We draw conclusions, inferences, take inferences from the international practices. I distinctly remember when I was there, Rahul Roy sir was there. He became president of the institute, but he was an early burnout, died at a very early age. And I remember he had the most advanced gadgets with him, and he would refer to that. And wait a minute, let me see what is international standard. ISA got to say in this. And he would come up corrections live, real time, in the deliberations of the ASB and so on. So please do comply with standards and do attend programs on essays, not because it is mandatory by the institute, because our level of awareness has to improve. And when the level of awareness improves, there will be a little bit of a scare also. It is good to have that little bit of scare on not being aware and applying the standards on auditing. And therefore, then we should apply that in the audits. All quality control standards, I mean, SQC, and all the standards, whether it's documentation, whether it's planning, whether it's written representations, all those things, very, very, very important. So evidence, relevant, sufficient appropriate evidence, and so on. So that is in the last about 1.5 hours, we had a discussion, introduction to the whole process of company audit in the context of essays, understood that they're mandatory. And I would say bulldozed through almost 15, 16 standards. We had a budget of time, and now we will move on to quickly look at what is new and some of the important things. Yeah, what's really new for 21-22 is Schedule 3 revised format. I did mention that section 129 is a section relevant section, and Schedule 3, all the divisions, 3 divisions have been substantially amended, revised. CARO 2020, I was happy to have a question from there. And CARO 2020 is applicable. First year is 21-22. Very, very detailed reporting requirement. So what I try to say in all the presentations is that 21-22 cannot be a copy paste here. Our work has become so mechanical. So, if you Google up, you would see a lot of accounting jokes about accountants. One which struck me is a question, Why did the accountant cross the road? Madam, can you tell me, Sridhar madam, why did the accountant cross the road?
Pardon, sir?
Why did the accountant cross the road? I'll tell you, don't worry. Question, there could be many answers to this. But in lighter vein, the answer is because he did it in the previous year. Our work has become so mechanical, but 21-22 cannot be a copy paste year. It's not only the year which has to be changed, the entire contents have to be changed. So I instructed my office, the audit team, that first thing you have to do is before copying the 2021 folder for 21-22, delete the auditor's report and also delete the balance sheet, the FS, which is in our folder, except for the previous year figures, which you have to refer to the previous year final figures, whatever. So that is how it has been done. So if you do a copy paste, there's a lot of risk this year. In lighter vein, I was putting this. First, I think we'll go to Caro straight because that's more important from the auditor. The overview of the order, if you see, 7 new clauses are there, including 2 which are newly reintroduced from Caro 2003 on internal audit with the modification. Also, the clause on cash flows during the year and the immediately preceding year has been reintroduced. 7 clauses have been modified. 7 clauses have been retained as it is. So the checkpoint is that whether you have all the 21 points in the Caro report. And there are 47 subclauses. The summary of changes, if you see, the new clauses I'll highlight the time permitted. Transactions not recorded in the books of account. This is required in Schedule 3, revised Schedule 3 also. The auditor has to say whether transactions which are not previously recorded, unearthed or disclosed in an income tax assessment has been properly recorded in the books of accounts, brought into the books of accounts. This is one new reporting requirement. It makes sense, assuming that there is income tax, as we call it layman's terms, raid, and the raid, the assessment, everything is completed within financial year 21-22 itself. Let's say that assets worth, the landed property worth 2 crores, a title deed, sale deed was detected, everything else is okay. 2 crores worth of immobile property documents were seized, and it is assessed. In the forums which we have discussed, I said the accounting entry should be land debtor 2 crores to provision for taxation, assuming that it is taxed at 60%, 1.2 crores, and to revenue 80 lakhs, 0.80 crores. This has to be done. If it's not done, the auditor has to report in Caro. The second new point is something which requires foresight for the auditor. So far, the auditor was required to know about the present, also having some hindsight about what has happened in the past. Now the auditor is required to have foresight. He should do about the future, prediction about the future. So in a lighter vein, somebody was saying, anyway, they are revising the syllabus for chartered accountancy. Why don't they include a 20 marks paper on astrology also for chartered accountants of the future to report whether this entity will be able to meet its liabilities into the future. But luckily for us, it is not in the indefinite future. You evaluate the financial ratios, which are now handy available in the revised Schedule 3. The discussion with the management, the board's plans, etc., the position of liabilities, the liquidity position, etc., etc. The auditor has to opine whether the company would be able to meet its liabilities as and when they fall due within 1 year from the date of the balance sheet. To that extent, he has to collect all the information. You may go wrong, but then if you collected evidence and you formed an opinion based on that kind of evidence, discussions, documentation, etc., you can still hold your fort, and therefore there's no worry about that. CSR, now CSR, I don't know how many of you would be covered or doing the audit of CSR companies to CSR are applicable. 135 reduced Schedule 7. 135 started as a very friendly section. But today, when CSR is applicable, there are a huge lot of responsibilities on the management, on the accountants, and also on the auditor. It's become a very demanding section. And mandatory spending of CSR, unspent amount has to be accounted for, which means that you have to take an accounting hit in the financial state, in the books of accounts. You would provide for the unspent amount, and it is not tax deductible. The differentiation between ongoing projects and other than ongoing projects. So that's CSR reporting is also a new requirement. Statutory audit resignation. If you are stepping into as an auditor of a company in the place of an auditor who has resigned, and a resignation vacancy, casual vacancy due to resignation, please be aware or recall that it can be filled only by the company general meeting. The board cannot fill that responsibility, a vacancy caused by resignation. So if you are stepping in, you should have clear communication with the statutory auditor and understand and report on the circumstances in which he has resigned. So very, very important this thing, and also with the management. Include that in the representation letter as well. The guidance note on Caro gives a detailed note on this. So that's a new reporting requirement. Consolidated financial statements. Now, Caro is not applicable for CFS, but as a auditor, the holding company which is doing the CFS also, in the consolidated financial statements audit report, if there are qualifications, adverse remarks by the auditors of its competent auditors, subsidiaries, associates, etc., that should be highlighted, that should be reported by the holding company or CFS auditor. That is another new requirement. Internal audit system. Internal audit system, the earlier question is reintroduced from 2003, Caro 2003, whether there is an internal audit system commensurate with the size of the company and the nature of its business. The management will always say that, sir, we have an internal audit. Our finance team, one of them is doing it on a monthly basis. Then we would naturally ask, is there a report? Is there a discussion? Is there at least a PPT which has been presented before the management? No, sir, it's an everyday discussion. This point will not sell anymore. They have added a second bullet point where say that whether the report of the internal auditors have been seen and taken into account by the statutory auditor. So there has to be a report by the internal auditors, and the statutory auditor should refer that and understand that very clearly. That's very important. This is new reporting requirement. Cash flows reintroduced, whether the company has incurred cash flows during the audit, during the year, which is 21-22, and in the preceding financial year. So these are the 7 new clauses which have been, which is there in Caro 2022. Other modified clauses, of course, we'll see if time permits, we'll discuss, come back and discuss. So, there something more. Applicability, as we discussed, branches it's applicable. If to the company it is applicable, branches that are audited also should give a Caro report. Branch auditors should also give Caro report. Government company, foreign company, its branches, all of them it's applicable. Small company under the Act shall be exempt, even if it falls under any other eligible category. That's a point which we call it clarified. Banking company, insurance company, Section 8 company, and 1% companies are also exempt. That is brief about Caro 2020. Certain other things which are important from a company audit 21-22 perspective, though it is not strictly essays, I thought this is relevant, and as a roundup, we have another 5-10 minutes to go. We'll quickly do that. We did mention that cash flow statements are mandatory under 2 subsection 40 as well as AS3 for all companies except small dormant offices must prepare cash flow statement. So small company, one of the participants, the members referred to small company. The definition has undergone 2 changes. One is the limit has been increased, which sir rightly said, turnover 20 crores and paid up capital of 2 crores. And the jointer is and. In the original definition, it was or. And implies that both the conditions should be cumulatively satisfied to be a small company. Your turnover should not exceed 20 crores and neither should your turnover exceed 20 crores nor your paid up capital 2 crores. Only then you would be a small company. And if that happens in the auditor's report, if there's a cash flow statement, the auditor should refer to the cash flow statement also. So accounting standards, another area of concern. In my second slide in the framework or key features, key considerations, I had listed this. Accounting standards, leave out Ind AS for the time being, the larger companies. Many of us, 95% of our clients are still on accounting standards. But accounting standard compliance again, though it is strictly speaking in the sense that it is of the management, the auditor should ensure compliance for 2 reasons. One is a fair presentation. 2 is in the main body of the auditor's report. Main body of the auditor's report, the auditor has to report, comment whether financial statements referred to in the report comply with accounting standards, referred in 133 of the Act, etc. So therefore, the auditor should ensure that accounting standards are complied with. Okay, so here in companies accounting standards rules 2006 was there. 10 years later, they issued amendment rules in 2016. So what makes me say all accounting standards 29-2 is because 2 of the standards have been withdrawn. AS 8 was withdrawn long back, accounting for research and development. Now that is merged with AS 26, intangible assets. And in this amendment rules of 2016, they have also withdrawn the standard AS 6 on depreciation and included that in AS 10. I hope all of you know what AS 10 is, renamed today as property, plant and equipment. Paragraph 40 to 60 of AS 10 PPE deals with depreciation. And of course, there has to be a reference Schedule 2 also. Companies Act Schedule 2 gives the useful life of various classes of assets, but it can also adopt a different useful life and residual value based on technical evaluation. Detailed note has to be given actually. Some of the standards I wanted to highlight, AS 15, employee benefits. For companies, small and big, actuarial valuation is mandatory. Please keep that in mind. AS 16, borrowing costs, not given the required attention, because all the borrowing costs are not to be expensed. If there is an outlay on qualifying assets, etc., that portion of the borrowing costs of the period to which the asset was under development, which is taking a qualifying asset more than 1 year for 12 months for its use or sale, then this amount of borrowing costs, interest on term loans, etc., will have to be capitalized, added to the cost of this. AS 18, related party disclosures. Even a small private limited company paying 2 lakhs of remuneration to MD director, AS 18 disclosures have to be made. AS 22, deferred taxation, taxes on income, recognizing deferred tax assets liabilities. The whole concept of reasonable, what is called reasonable certainty and virtual certainty. One should be very clear, and if they have to be recognized, they have to be recognized, and should not be recognized if there is no reasonable certainty in all cases. Other cases other than unabsorbed loss and depreciation. Deferred tax assets represented by unabsorbed losses and depreciation should be recognized only if there is virtual certainty about future profits based on reliable conclusive evidence. Slightly technical standard at this point of time. The time is too short to discuss that. So that is there. AS 26, intangible assets. Still, I see financial statements where preliminary expenses are written off over 5 years, sometimes shown under current assets, what is not written off. They're all completely not in the right spirit of AS 26. If it doesn't meet recognition criteria, as mentioned in AS 26, it should be written off. So preliminary expenses have to be written off in the year in which they are incurred. The first year of the company's incorporation, preliminary expenses have to be written off. So these are the points, my dear colleagues, I thought are relevant for a discussion on Company Audit 21-22. Please understand that essays are very important. Equally important this year is the new CARO 2020 and the revised Schedule 3. Let us try to attain good compliance, 100% compliance, so that we're not taken to task and there are no unfortunate remarks by regulators saying that we are not doing our job properly. So with that, let me now conclude. Time is almost 8, another 5 minutes for Q&A. We will, I think there's a question in the chat box. Let me take that first before I conclude. So for that, big thank you to the organizers and for all of you who have been online with us, stayed glued. 70 of participants as of now, and maybe some more on the YouTube, maybe have been out there for attending this program. I feel enriched that I could interact with so many of you. Interact with all of you and a good learning experience working together. So looking forward to coming to Vijayawada branch an early occasion for a professional interaction. And of course, the fun and the fellowship you always have. The spicy food, which is common to Andhra and Kerala. I look forward to that. So thank you, Madam Shrita, and all of you there, Vice Chairman Narendra and our Secretary Ravi Kishore sir, all of you and the managing committee members. And with that, let me say thank you. Thank you very much for the last 2 hours of interactive discussions. I'll take the question. I think there's a question in the chat box, which is about in respect of CSR unspent amount, whether provision to be made, including the previous year financial year also or not. Sir, if I remember correctly, it was 1920 financial year, where the unspent amount had to be provided for. The institute came out with that guidance note. If that is the case, the previous year figure unspent amount would always be already been provided for, and in which case we have to provide for only the amount which is unspent in 21-22. That is how I feel. It looks like. So please refer. I think it was 1920, first year in which the mandatory requirement of providing for the unspent amount was came into force. That's how I would put it across. And today, again, if for other than ongoing projects, if there is an amount unspent within 30 days, sorry, within 6 months, you have to. It will go to the Prime Minister's fund or any fund referred in Schedule 7. It is gone from the hands of the company. It could be PM Cares, it could be CM's Disaster Relief Fund. You cannot keep it with you. That is what you're supposed to spend within that year. Ongoing projects are projects which are multi-year projects, not more than 3 years. The unspent amount has to be transferred to a designated bank account within 1 month from the end of the financial year. And that can be drawn, utilized like the capital gains account, can be utilized only for spending on CSR in the period that is stipulated. So ongoing project is probably a village adoption project, for example, housing, sanitation, schools, medical healthcare centers, primary healthcare centers, etc., which may take, let's say that we're constructing 50 houses with all kinds, with toilets and proper sanitation. There's a small primary school in a very remote place. In Kerala, we have these Adivasi tribal settlements. So adopt a corporate adopts. Many of them are doing that. In fact, laudable, and the CSR spent last year is 1 trillion rupees. That is 1 lakh crores have been spent by Indian corporates on CSR mandatory, though they are not tax deductible. Many of them are quite focused. Tata companies, Wipro, HCL, all of them are highly focused on social welfare and bringing a lot of good to the masses across the country. So not to stray from the point. So if they are not, then they have to park it in that within 1 month, they have to park it in a designated account, which has to be withdrawn only for the CSR purposes. Again, a CA validation would be required. So with that, if there are no further questions, I leave it back to the chairperson, I will call you. And thank you participants once again for staying glued all these 2 hours. Thank you so much.
Yeah, thank you very much, sir. That was very comprehensive, and at last we were given the important considerations to be taken while involving in any sort of audit. Thank you very much, sir. Of course, corporate audits were the main focus, but of course these standards and will equally apply to the non-corporates also. Thank you very much for that,
3CB cases, sir. I did mention 3CB cases. We are expressing an opinion, and whenever we are opinion on true and fair, essays will come to play. Yes, sir.
And also, Chinnaswamy Ganeshan sir has a word of appreciation to you also. It was in the chat box.
So, I see. I didn't see that.
Just now, he has a text in the message. So, thank you very much, sir. Madam,
I'm entering another meeting and believe. Okay. Thank you, sir. Chinnaswamy Ganeshan sir has left a note. There's another question by Ramaraju sir. When audit tools developed by ICI, available? As of now, no, but then a lot of audit tools, CAT tools, which are available, which can be bought online, which can also available. There are agencies that are doing it. I don't have handy information on it. My firm is now working on having some of the CAT tools for effective audit. Yes, sir. Please continue, Dev sir.
Yes, sir. Madam, Shireen, madam, a word from you, a last word from you. A word of appreciation from you to Jaman sir. Next time we should have him. Next time we should have him physically.
Yes, sir. That's
My
what
pleasure.
I want to say that definitely you should come to Vijayawada, sir, and you should give the presentation physically.
Sir, we have
Thank
seen we have experienced your hospitality, and you
Yes.
should also
Yes,
experience
sir.
our hospitality.
Yeah,
Okay,
I
madam.
always would love to, and no doubt, it's also a place on record that I'm so happy to see 60, 70 live participants for a essay program at this time in the year, tax audit time. That shows that you have done a lot of groundwork on getting people on board, and please continue the good work, and we'll hopefully meet in Delhi when you receive the Best Branch Award.
Yeah, thank you, sir.
We
Thank
saw
All the
your
you
best to
very
all
much.
of you.
energy and dances. And we always remember those days when we came to orientation.
Yes,
You
yes,
are so
very, very
energetic.
memorable. Yeah, May 19. Yes.
Yes, sir.
Yeah, thank you,
And
thank you, sir.
who are coming to Kerala, please give me a ring. Airport, I'll take care of.
Definitely. Thank you so much.
Okay, thank you. Bye.
Thank you, everyone.
Good night, everyone. Stay safe. Bye.
Good night. We'll sign off for now and meet you tomorrow at 6 p.m. for another program. Thank you, one and all.